All right. Good morning, everybody. Good morning, Randy. Let me know if the Twitch is glitching again or anything, but I think that for the most part, that wasn't on my end. I don't think that might have been something happened on Twitch servers. I'm not sure. All right. The market is up further. So yesterday, the market was up, went up. I believe it was on the word that tariff would negotiation. There was something that Trump said that was related to tariffs, and that caused the market to go jubilant. And then it was like, okay, well, maybe not. And so then it settled in, but it actually improved just a little bit. So that was some words of improvement, I suppose, and that carried through overnight. So we have the market moving up in pre-market and overnight, and we are at sort of the start levels of Friday, or was it Monday? Friday, where we were Friday. So this whole week could probably just hang out here, but we did that before. So I caution you guys, don't take the bait. This is the bait right here. I mean, you kind of have to, but if you do take the bait, make sure you are willing to get out with no follow through at like break even. Like it just doesn't work out. Don't even worry about your stop. But I would suggest do not take the bait. Don't be getting into this market right now. We're going to wait around 6 weeks for it to put in a signature recovery bottom. So like, you'd see something like this, where a double bottom might happen. Then it comes back out above the 200 moving average, comes back down, reflects off of it, and then is up and out. This is the buy point. And right now, we're like maybe right here. So you can see that's going to take 2 months, 3 months. November, that was from that circle there, that was November to almost April. Like 5 months. So, these things can take 6 weeks to 6 months to get put in. And there's really no point. You just want to preserve your cash in the meantime. We can look for day trades, but those, are not always there. NAUV is one of them today, and it looks like it has no further follow through at this level. And the initial jump was just that, just an initial jump. So there is no continuation. There's no reliability on that. NXU just happened, I guess. It just started moving. NXU about 8 minutes ago, from about $2 to $4. And that is a high tight flag, so that is looking pretty good. So day trades go. I don't know. Do I want to take it? Take it. Let's see. Let's take a look at the volume. It looks a little dicey right here as far as the sell volume versus the buy volume. Yeah, and even this buy volume was more like something. No, I don't know. We're holding here at this high tight flag area on this day trading movement. But that's only a 60. What is that? NXU. NXU, where are you now? I just saw you here and now you're not there. Where the hell did NXU go? All right, that's weird. It was on my list in the scan and now it's not. Can that not be there? It didn't. Why would it just disappear? That's strange. It's not on two lists. How about momentum list? Nope. That's strange. And it's nowhere to be found. Okay. Anyway, oh, there it is. And now it should pop back up. Okay, BTOG is another one. So let's just put these up. NXU. By the way, Palantir is acting so strong through this last few days. Everybody wants to be back in Palantir, I think. Sorry. The other one is BTOG, but these ones are not over 100% or near it. So we try to stay away from those. And then Onco and Saiku, Galaxog, Onco, and Saiku. No, those don't look good. The only one are Nauv. The only ones are Nauv and NXU, and Nauv is holding a high type flag, and NXU is just really fresh out of the gate. But from the minute to minute volume analysis, it looked like kind of reached the level it wanted to reach. Now Palantir, let's take a look at that. Palantir could be a buy at 88.50 if it can get up there. That could happen today, but it could be bait. There's not a lot of certainty. 88.50, and if it does stop at the open of like 84, which is where it's at now, so about $4.50 on Palantir for a swing trade, swing scalp. $4.50. That's about half the range, so you could shoot for about an 8-to-1 on that. So that'd be $36 from 88. Target of 124. That's all the way to the previous highs. I don't really believe that it's going to provide that. Yeah, before earnings here. Maybe it'll get up to this previous level of 97.35. But anyway, we'll have to see, and that's only if it gets really over 88.5. This morning, the market's opening in a minute and 30 seconds. Palantir is still one of the hot ones on the market. Yeah, if you know any of any others, you share it with me so I can take a look. EZPW, GVC. That NGVC looks nice, but this is the real troublesome area right here. But every stock, has been doing that during this moment. So the market is up 3.5% in pre, and we'll be opening momentarily in 20 seconds. And then we'll have a better sense of things once the market opens. We have to stick around, to see if any opportunities shape up, because some things could shape up. TJX was one that's come up on a couple of times. Possibly you could get in if it were to break these levels there. Okay, the market is open. Maybe, I'll grab NXU if it breaks 430. Freak out. Maybe. Yeah, here it comes. All right, I'll go ahead and get into NXU. Stop at 355. I think I actually have dollar of risk on this one. It's going to 308. So I could even let it go to 3, but I'll probably just go ahead and get out if it breaks 355. And then find a new trade on it if I need to. NAV responding strongly now. NAV, NAOV, for the day trade. For day traders. The market's just hanging out at the open. Palantir is pushing. I'm already in it, so where is it at? I was telling you, we could potentially get in if it gets 88.50. Oh, it's only at 84.30. All right, and I hit my initial stop that I want to get out at on NXU, so I'm going to leave that alone. I figured that. And now, however, is moving in the other direction strongly, and it looks like it's halting. So, but yeah, I'm not just aggressively going after day trading right now. But that one looked good. In case you were monitoring two stocks and got in that, good job if you did. Went into a halt up. All right, now the market, what does it want to do? So far, the market's just hanging out at the open. Let's see what we got. I think, what was it, Fed? Yeah, we have Fed minutes tomorrow at 2 p.m. and then CPI on Thursday. So this market starts to move more later this week. And then Friday we have PPI and consumer sentiment. The big one is going to be Fed minutes tomorrow at 2 p.m. And then Thursday CPI. That's going to be just as big as well. So we have two fairly large economic movers going on this week. Wednesday at 2 p.m. and Thursday at 8:30 a.m. pre-market. I am already in Palantir. And that's going good. All right. We're almost 5 minutes past the open, and it looks like we only have about 25% breadth in growth. So that's not great. Oh, WGS. This is a stock I was looking at yesterday. Because it had very good relative strength. Yeah, WGS, high relative strength during correction on my list. High relative strength during correction. And it's doing well today. PPC, something I've been in. Not bad. Yeah, that's pretty nice. Bit scraggly of a chart. These are the pivot points. So right now it can move inside of this range, and that would be meaningless movement. Doesn't mean anything. It's just inside the pivot point ranges there. The pivot points are the last low before it broke in the opposite direction, or the last high broke in the opposite direction. That's how you read. That's pivot point trading. That's how you read the pivot points on the chart. If you get in here, it's a mid-cheat during pullback. A mid-cheat entry during pullback. on PPC, Pilgrim's Pride Corporation. WGS, PPC, I'm going to put PPC on my list here of high RS during correction. PPC. I think it is on some of my other lists. No, maybe not. Oh, there it is. Yeah. Moving fast the last 5 days. Okay. Okay, market pulling back just a little bit there. The market a little bit red now, but it's sort of neither here nor there. I mean, the big data comes out Thursday, and then ahead of that, we're going to have Jay Powell's comments tomorrow at 2 p.m. Those things are going to be moving the market around. Some of my put credit spreads stayed, hung in there, and are doing fine. I need to see a little bit more improvement from Walmart. Just got a message for something from on my phone. What was that? Oh, okay, voice message. 1 second, guys. Let me see. All right, I'm back. Just needed to listen to that voicemail. All right, Walmart. Okay, it's definitely in a better spot. But the only things that are green off of the open today are Palantir and Chewy of the things that I have. Even though the other ones are opening in a better spot, they're actually still selling off. Like Hims, opening in a better spot, but it's selling off. It's red. So I'll have to see how, on what volume it's doing so later. Now opened for trading after halting at 10 and just hit 30% from the halt point. Now the VIX is at 38. So I mean, we're just in completely untradeable territory still. We need that to be below 25 realistically. But I guess the exact level on here could be 28 or lower, and then we could start to consider things. But as you can see, the market doesn't stay oversold for too long. So that could have been a bottom yesterday on the market, or the day before, whatever that was. Yeah, no, yesterday where it opened. It certainly was a reclaim. Essentially, kicking off a reversal, an upside reversal movement in that direction. However, how long will it last? Over here, we hung out for a week and a half, 2 weeks at a bottom, and then started to come out, but then reflect off the 200. So that was bait. This 50 is about to come underneath the 200. They call that a death cross. So that could potentially be the point in which you consider the market a bear market, because the last time it's done that was when we went into a bear market back here. Oh wow, I didn't know. How did did I get this little thing on? That's cool. Huh. Where did that come from? Huh. Anyway, right here, Death Cross, and that's when we went into a bear market. We're like 1 or 2 days away from a Death Cross. Hola, good morning. We're like 1 or 2 days away. Look at this. I mean, it could even kind of happen today if today was red enough. Very feasible. So Death Cross would put us into a bear market. But either way, bear market or a deep correction, we need to wait for a full recovery pattern, which is about 6 weeks to 6 months long. So you just wait in cash. Is, the idea here. Wait in cash. Don't get whiplashed. And just wait it out. Wait for the good opportunities. That can happen during a deep correction. Let's go back to, like, for example, see the 2020 pandemic that happened. But see, what my point is that can happen, yes, but look, it only happened for a moment, and then we were back up above it. And we also had a recovery pattern that we could trade, which was right there. It was on this day, was the first good interesting entry day, and then even this day as well. And then up above the 200 moving average, you had this day and this day. So you had 4 potential entries during the pandemic after the bottom to get into stocks, to get into leaders. And only 10% of the time after a deep correction or a bear market are any of the prior leaders going to be the ones that become the leaders and the ones that run in the new bull market run. So only 10% of the time. In other words, 90% of the time, the names that you're familiar with that were the leaders in the last few years, 90% of the time, they don't lead anymore. They're going to go into a resting period. And it could be years. I mean, just think of Cisco. I mean, it took 20 years for Cisco to get back to highs. 20 years. So whatever's lead, you want to hunt for new leaders. And new leaders are going to be ones that have beautiful charts. Like when I was looking at WGS, and there's going to have a few things. Beautiful charts that just go up and up and up. Great earnings information. We have growing revenues here on an annual basis, and they've looks like they're projected to become profitable if they aren't already. Yeah, this is their first quarter profitable, and they've been growing revenues, and revenues keep growing. That's a good sign, and they're profitable, and their margins, well, they're profitable now. So margins still remain to be seen. So it's a little bit fresh and new of a company. It's called GeneDx. I do not know what they do. You can research them, but it's a potential leader, and it's acting very strong on during this correction, and that's a clue. Anything that's acting strong during the correction and putting in strong, relatively strong pattern during the correction. See, like, compare that to the market correction, which is like this. Right? I mean, just like drawing that. This is like what you see on the QQQ. Do I really need to write that out? So this is, it looks like Dairy Queen. QQQ. Forget about that. That's a little cockatoo hairdo thing. So anyway, down, see, really strong versus this one, which is relative to that, strong compared to the whole market. So it's one of the ones that's on the strong side of things. And when you look at all kinds of stocks, like look at Apple, you can see that, fuck no, you see, that's not relative strength. That's not going to do it. That's not going to have the power moving forward. It's not going to be in that one. So I don't know. I don't know. I don't have a lot of faith in biotech. This is probably some kind of biotech company, but you can't ignore strength for long. Let's see what they say they do. They are in medicine, obviously, nursing services. What do they say they do here? Operates a health intelligence company. It engages in healthcare with use of its collected disease data sets. It offers exome and genome testing for diagnosis of genetic diseases. All right, so and it's headquartered in Stamford, Connecticut. So it sounds to me, oh, this is okay, GeneDx. It sounds to me like maybe they're leveraging artificial intelligence in order to do genetic disease processing and testing. And for whatever reason, that has been a big fucking deal for it ever since April of last year. For the last year, almost exactly to the day, for 1 year now, this company has been on fire. They were $14 and now they're $92. They hit $115, and it's possible they're going to lead right out of this. And the possibilities are 100, 400%, 1200% gains from here on leaders whenever you find them. Leaders in bull markets, go big, 100%, 400%, 1000% over the course of 1, 2, 3 years on a bull run in that trend that they're holding. So that's WGS. Another one I'm looking at is TJX, and that chart just is fantastic, and it has a really strong reaction, very nice reaction to the correction. This high over here, relatively speaking, is really strong. In other words, the angle from here to here, that angle, this angle, is not steep. Whereas on the market is very deep to that same exact point. Okay? Trying to get a circle, but this trackball's a little dirty or something. I don't know. I always clean it. So that angle right there is so steep, you see, on the market compared to that. So that's called relative strength. So you can see that. And then the distance from here to here, okay, that doesn't tell you too much, but this huge leaping out all the way to the top here is a massive show of strength. And it's been choppy since that moment. But this is something that may lead. So if you go then now look at the earnings. Okay, we've got annual revenue growth year over year over year. It's profitable year over year over year over year. The margins stick around 8%. So there's good management, solid, consistent management. Quarterly, they've been on a run. Revenue-wise, for the last 4 quarters, they've been profitable for every quarter. They've been profitable for 5 years in a row. And home apparel and home fashion projects. Marmax Home Goods, TJX Canada, and TJX International. The Marmax segment, apparel, blah, blah, blah. TJ, what? TK Maxx, because I'm wondering if it's TJ Maxx also, but it might be. It could be retail. So retail, apparel, and footwear. It's under apparel, retail, footwear. Well, sometimes these companies do really well. Retail, and you got to be ready and prepared for that. Like Lululemon, we went on an incredible run in 2020 and post-pandemic in the bull run of 2020 and 2021. So you need to be prepared, because you just don't know, and you don't really need to guess. There's no guessing necessary. You just follow the charts. The charts are telling you what's strong and what's getting invested in. So I'll be looking for more and more stocks throughout the day today, and I'll keep you posted. But now I'm going to go do some errands, and hopefully that helped you out with the market, to understand the market and know what to do. But you should be trying to find charts like that which have strong relative strength during the same period that the market was showing relative, massive weakness. Well, whatever you want to call it. If this is the litmus guide, if this is the baseline, then you want to try to find stocks that are doing better. Like, for instance, today the market has only bounced like 30% from the last pivot point, maybe 50% from the last pivot point. Then it came like this. It keeps bouncing about 30 to 50% from last pivot points. So then you go over to TJX and you look at those same bounces, and they're phenomenally much stronger. You see, that's really what you're looking for. Those are the same points. Those bounces all came back up to highs. That's a lot of strength. And then WGS. Those are two stocks I'm tracking. WGS is super strong. You go to like something like Nvidia, it's not there. Go to Apple, hell no. You go to Microsoft, nope. Amazon, not a chance in hell. Netflix, see, is stronger. It's remained above the 200. That's that red line down there. So Netflix is stronger. Netflix is the strongest out of that bunch. I'm missing one, I think. Netflix, Amazon, Apple, Microsoft, Nvidia. Who am I missing in there? Amazon. Is that? Oh, Tesla. Yeah, and Tesla's in shambles. Tesla's not in any good shape at all. So the only real good one there was Netflix of the Magnificent Seven. Netflix. That's it. Everything else not in good shape, along with the market. So those, like I said, only 10% of leaders are going to remain leaders during the next bull market after a deep correction or bear market, and 90% are no longer the leaders. Well, it looks like Netflix is showing signs that it could remain a leader, but the other ones, nope. I'd stay away from them. Move your cash. All right, have a good one, and talk to you later, guys.